Hello everybody and welcome to another tutorial on emini.today tools. We're going to talk about some new features that we have since a couple weeks now. Probably the previous videos, at least part of them, is going to be obsolete because like I said, we have a lot of new stuff. So I'm going to talk about all of them. How do I use them? And yeah, let's jump right into it. Okay, so we are in main terminal with all the tools on the left side. There's one thing which is missing, and it will be added probably today, a bit later, and it's gonna be the same thing as Orderbook, but it's gonna be Orderbook but with the 10-second refresh rate, so it's gonna be really fast. So you won't have any significant lag like a minute or two with the present one. There's also going to be a change in this part of terminal. Like we have this ES intraday master chart 15-minute right now, and it's on the old charting engine, which is basically not too good. So I will put something different here, probably last market profile or something like that. So yeah, that's gonna be different soon. Okay, so before I dive into the tools itself, I know that many people who are new to these tools are asking me about, okay, fine, but how do I use them? Because there's a lot of different things, a lot of dots, lines going on, and sometimes it's just hard to find anything useful. And that's why I wanted to start this video from top to bottom, uh, meaning I will show you on my process of trading and thinking about these tools as I apply them to my trading. So the first thing and the most important for me is to have a context. So the context is the structure of a price, which is expressed in the market profile, right? So if you go to market profile, you will see that these are just simply my posts on the blog, and I try to update them every day. There are a few days that there was no a profile, but most of the sessions after the US session, I upload my view on a price structure through market profile. So this itself is a strategy, right? So most of the tools that I'm gonna show you today are capable of having strategies by themselves. Like if we take Orderbook, there is a strategy inside it. If we take market profile, there is a strategy inside. So you don't have to necessarily connect or use at the same time all these features to get a trading signal. Sure, you can do that, but the way I thought about it when making these tools and these features was to have different kind of strategies. But there's nothing wrong to wrong with using confluence from, let's say, market profile and intraday chart or something like that. So back to market profile. When we go into the present day, this one is actually profile for Friday. So it was posted on Thursday, and this is our structure with some commentary below it. And basically, what you can do is just put these levels on your chart on whatever platform that you're using, and just have them in the back of your mind, right? So the profile analysis is pretty straightforward. Based on my experience and screen time with profiles, and also machine learning, which I used to find patterns, I constructed a sort of a playbook for ES profiles, and it's working really nicely. I have like 12 different patterns, which are either bullish or bearish or sideways action, and I always put it in a comment section here. You can see that profile turned to bullish. So in this case, I'm more into looking for long entries, and the long entries are going to be put on the chart here, and you can see like sometimes you will have two scenarios. Like on Friday there was scenario number one, which was just go long at this 106 to 101.50 zone. So it's about 5 point zone, where I'm gonna be really interested in going long. The level itself is usually pretty precise, and sometimes I will give you the stop loss level for this trade or this trade, but usually it's not more than 10 points. Okay, so whenever you see that the pattern is bullish or bearish, that means that the structure tells me that this pattern will allow you to trade with a greater probability to trade to the long side. And I want to get in either at the first scenario level or at the key resistance. It's actually support. So or the scenario number two. You will always see, usually you will see the minor price zones, which are basically pretty important levels. So in case of price breaking through the scenario one area, I would look to go long in this minor area. But when it's minor, I would also want to see some support from the other tools. So either I want to see the order book turns bullish in this area, or maybe some options level is there to support this this idea of going long here. But other than that, these scenarios, like scenario one and number two, and these price areas, they don't need to have further confirmation. It's always good to have a confirmation, but it's not necessary. So like I said, these are the strategies itself, and that will give me a structure, a framework, and a guidance of price levels and the sentiment, so the pattern, if there is for a given day. What do I want to trade? So based on this profile for Friday, um, I wasn't looking for shorts, right? I was looking only for longs, and these levels were specifically the ones that I was interested in. And as you can remember, 106 was actually the bottom, and we went uh, like almost 70 points from this level up on Friday. So this itself is a strategy, but it also gives you the context of what's going on, the trend, the pressure from the structure, and the major levels that you wanna take a note and put them on your chart, and observe what's going on at these levels, or just trade them straight away. And like I said, the stop loss level shouldn't be more than 10 points from this area. So if we would get to 4090 somewhere here, so I would be out of this trade, and probably even sooner. One more thing, these, let's say, predictions are for the next 24 hours. So until the next analysis that I post, this one is valid. When I post the new one, so that on the next session, this one is no longer valid. So let's say we had on May 13th, we had the bearish pressure, we had a level, and these levels are no longer valid. Like, you can see sometimes that these levels are kind of important, and price interacts with it on the next day, even though this is not a valid profile anymore. But like I said, we go from session to session, like a step by step, trying to predict what's going on, and the actual present structure. So you don't look at past levels. You just go with the present one, with the newest one. Um, so yeah, so that would be for profile. It's pretty straightforward. Nothing really complicated about it, and I encourage you to go through these predictions or analysis, and try to reverse engineer it. Like, the patterns are pretty obvious. There's really not much of magic inside of it. A bit of magic was while I was let's say, discovering these profiles through machine learning, but it wasn't like it wasn't like a most important part of it. It just allowed me to notice some things that I didn't notice before, and so I think that anybody can do this. Anybody can create their own playbook based on profiles, as you know, that I believe that volume and market profiles are one of the greatest tools there are. And once you understand it, and once you combine all these informations into some kind of a strategy or a playbook, then it's much easier, and you will actually see the power that just the simple different way of approaching the data and visualizing this data in form of profiles, gives you a lot of um, precision and a lot of information, which otherwise is much harder to obtain. Okay, next we'll go to Orderbook. Right, it's the topic on fire lately. It's a new feature, but based on a lot of past experience, and I just put together some new ideas into it. And well, it performs so well lately that I started to trade it with the automatic strategy on Sierra chart, because it really looks like actually this one can be automated and traded with success, which to be honest, I kind of don't believe in automatic systems. Um, so it's still for me a bit too early to tell if order book analysis is really the kind of tool that can be automated and fully um, you know used as independent strategy. But yeah, so far it's working really nicely, and I've made some improvements in it, which are already available. And let's go through it. And it's also a really straightforward thing. Um, so um, three most important factors in this tool are basically the colored dots, right? So as it says, it's the order book analysis. So what's the order book analysis? Well, when you look at the DOM, or the price ladder, or however you call it, but you will notice that, especially on markets like ES, NQ, and other big movers, you will see that it's kind of hard to watch it and analyze it real time with your own eyes, because it's moving really fast. Usually during the regular trading hours, it's gonna be really hard. And I always wanted to quantify some aspects of the order book, because I know that there are a lot of things going on there, a lot of patterns going on in the order book itself, which are worth noticing and using them. But like I said before, it's hard for someone who doesn't sit and stare for a couple hours, into this, and basically, you can go crazy uh, just doing it alone. Um, so what I tried to achieve was to put together these patterns that I see, and also um, the quantity of orders, uh, and calculate it in a way that it will give me some kind of a sentiment based solely on the order book. And these little dots, red and green, so the smallest ones, are actually the sentiment calculated based on a order book, the actual present sentiment. And what's interesting about it is that it's sometimes linear, which means it follows price in sense of direction, in sense of trend, and sometimes it doesn't. So it's not like a mean reversion thing, and it's not like a trend thing. And as you know, I really like this kind of information. I really like this kind of indicators, which are not predictably based on a market behavior in sense of being trending or not trending. So this is not linear, and you will see sometimes that these dots can be, red for extended period of time while market goes up, or in opposite situations when the market is dropping for a couple hours and the dots indicating that the sentiment on the order book is long, right? So there are more bullish events happening on an order book, and still the price is falling down. And many times you will see that in the last hour of the session, suddenly, something changes and price goes in the direction of these little dots. But what I want to emphasize here is that this gives you like the first level of information. This is just a heads up. We don't want to use these small dots as a trading signals or as a trading kind of advice on if we, let's say, if we have some kind of a resistance here, a level, and I want to see if this confirms this level. So is it producing red dots? I even wouldn't use it this way, and I don't use it. But in the whole strategy that I'm using here, it is important information, because all these analysis here and the automatic strategy that I use here takes this into consideration. So this is why you see it. It's a part of this strategy. So I need couple elements to show the same thing. And if we zoom in here, you will see that we have green dots all the way here, right? And you will see the second element, which is these medium-sized dots, and they are marked as sell algo, and here it's buy algo. So this is what I was talking about, the interaction between the order book and transactions, so time and sells. And basically what this whole tool does, it analyzes the order book, as I mentioned before, but also the time and sells. And once everything lines up, so the green order book, the algo which was detected, which was a buying algo, and few other elements like absorption. And so when these algorithms which are detected here were not absorbed easily, then you will see that big green dot which is marked as long. And this is where my automatic strategy opens a long position. Okay, so it's important that you understand that it doesn't just sell here because it detected sell algorithm, or here it goes it would have to be marked as a short. So a big red dot and you know, and a marker short. So this is the entry. The entry is, like I said, when all the dots has the same color and you have a name, long, a marker, and this is when my strategy goes, you know, into a long trade. And so basically, this is the entry, right? And one important thing to note here is that this is 24 hours chart. So it works in during the ETH and RTH um, session. Okay, so when do we exit these positions? So I can only speak from the perspective of my strategy, and which is based on these indicators. And I'm not saying that this is the best approach. It's just the one that I'm testing right now. And the way I do it is I exit on uh, um, on three different occasions. So the first one would be obviously the stop loss. And right now I run this strategy with a 15-point stop loss, which is a lot, but I'm still working on some, more effective way of managing the risk with these signals. But yeah, it actually didn't get any. I think it didn't get any SL. I mean, it got one stop loss before last modifications, uh, the absorption modification, the absorption filter. But anyway, so the first um, way to get out is through stop loss, and remember to always use the stop loss. Whatever the tool is, however good it is, you always use a stop loss. For this strategy, in my strategy I use 15 points. But like I said, you can use, for example, you can use a delay in the entry, because like probably 60 to 70% of these signals that we saw so far were like once you get long, you will see the price will actually turn back on the signal a bit for a couple points, like 4 or 5 points. And some people in our group, they wait for such retracement, but it's not like a rule. It's not gonna happen every time. Sometimes you will get like practically no retracement, and you would just miss the trade if you would wait for a price to fade the signal a bit. So there is no rule in to that. My strategy doesn't use any retracement. It just enters when the long signal pops up or a short signal pops up. So the first exit would be on stop loss, obviously. The second one, and here is how my strategy deals with the opposite color of algo. So whenever I'm long and I would get the opposite color algo, like a sell algo over here or over here, it doesn't matter what's the order book pressure, the small dot color is. If I would get the opposite color of algorithm, which is detected, then my strategy just goes out. But I plan to deploy the clone of my strategy on different account, which will ignore the opposite colors and just goes from long to short signal, and will hold the position for much longer and aim for some swing trades. And this way it's not gonna be like so many signals going on. But and why I do it, it's because the data that we already have to backtest this, it's not much, and that's the big minus of this strategy, that we don't have a lot of data to backtest it, because it uses the MBO, Orderbook, and stuff like that, which I just don't have enough historical data to backtest it, and that's basically why I still use it on a smaller size. But anyway, there are two types of um, of these strategies that I want to use. The first one, goes out of a trade when it sees the opposite color algo detection, but it will also I will also have this other strategy, which is based exactly on these entries, but the exit will be the reverse signal. So I would only get out of this long if I would get a short signal somewhere here, or simply on a stop loss, right? Um, the other things that you see on the chart are just some levels based on market and volume profile, modifications of value area low and value area high, and POC and volume point of control. And this thin red and green line are just one standard deviation 24-hour VWAP bands. So it has nothing to do with the strategy itself. And you will notice on my different charts that there are some things on them which are not like used in any particular way or strategy. It's just there because I test something, or I have some kind of idea and I just put it on a chart. But in this case, it's not. It doesn't affect any of the signal or any of color. It's just there. It usually serves as a pretty good support and resistance, these modified value area lines. And yeah, that's the only reason why it's there. Okay, so I think that's pretty self-explanatory as far as order book analysis chart goes. Like I said at the beginning, there will be one more chart of the same order book with a much less history, but it will be a 10-second chart, and it will show the same things, but it will be much faster. So when the signal pops up, you will get it like after like 10 with this 10-second delay or something like that, because right now it's this 1 minute delay is a bit too long for a lot of people. And you will see this over here, probably below it there you will see the order book 10-second or something like that. Before we move to the SPY options, I forgot to mention one thing, that you will clearly notice one thing, that there are a lot more signals during the overnight session. It's because the whole algorithm is divided on two sessions, the ETH and RTH. And there is a lot more going on usually in the last 2 hours of overnight session, and you will see a lot more activity and a lot more algorithm activity there. As far as the RTH session goes, I wanted to be a really picky on actually getting a signal, because there are a lot of algos working throughout the session, but I picked only the most significant ones to be detected. So you will see some sessions, the RTH sessions, have no signal at all, or just one signal. Sometimes there will be more, but usually there will be just one or two signals, or just a few algos detected. And it's not because there is no algorithmic activity during the RTH session, but it's because I'm looking for the most significant ones which can produce something, like a higher grade signal for a bigger push in the market. Maybe someday I will put another chart with more of these algorithmic detection things, but right now it's it's something that I think works better to have a fewer signals, but a higher quality ones. Okay, so let's go to the options section. And in options, you will have two same tools, but expressed on a different instrument, right? Because because one is for the SPY, so the ETF, and the other is for futures, so the ES. Let me put it side by side here. Yeah, okay. So this is one of the most powerful things that that I got in my arsenal, and you know this from the previous versions of emini, and I'm really big into options and to obtaining the data feed and information from options and using it to trade futures, because it's right now it's everybody knows it, that the options are affecting the market in a in a really heavy way usually, and this is the tool that will allow for kind of having a look into the options market. So when order book is just based on ES, it's just the futures market. The options section is telling you some story about what's going on the options front. So basically, what you see on this chart is it's divided on two, and in the upper section you will see obviously the levels, right? So what are the these red and green levels and how to use it? First of all, the same way as the market profile gives you the overall context and the structure for the price, it is actually the same thing going on with these options levels, because the way the options are priced is that people are expecting some kind of volatility. They are expecting some kind of market behavior. So the first side is the sentiment. What's the sentiment of traders on options market? But they also expect the ranges of price movement, right? And this first and basic role of this tool is to give you kind of a rough expectations as far as the one session range is expected to be. So whenever I look at this chart, I can see, first of all, what's the average expected range. You can see the highest red line and the lowest green line. These are the extreme deviations of price that can occur today based on the option traders' expectations. They are also important because, as you probably know, the option dealers, they have their levels of where they have to hedge their positions really actively. They the way they make money is whenever the price is within expected range, the expected by them range, it's okay for them and they make money, right? But when price gets above or below these ranges, so they don't care about the direction of the market. They care about the volatility of the market. And this basically shows you what are these expectations. And above these, which happens really, really rarely, like you don't see it more than once in I don't know, like 2-3 months, and usually price gets back into these bands. So first thing that it gives you is like you will have the understanding of what to expect in the market. Now the other thing that it's useful for is you will see this second part, a lower part of this chart is this indicator, and the indicator is divided on these three sections: a red line, blue line, and a green line. And you have actually two indicators. So the yellow indicator is a sentiment. It's a sentiment of the overall transactions on options today. When it's above the blue line, it means it's bullish. When it's below this blue line, it means that it's bearish. Okay? Now, when it's above the green line, it means it's extremely bullish and the market is going to be really hard to stop. When this would be this yellow indicator, which we call DV actually, when it's below the red line, it means the market is extremely bearish and it will be very hard to stop within these first green or red bands. So basically, this situation here, when the sentiment is extremely bullish, you can expect that the price will get in these red zone, and the sell will come somewhere here, but it will definitely move above the first red level. And same for same situation if we would be extremely bearish. It's almost guaranteed that the price would fall below this first green level and stop somewhere inside these bands. Now, the other indicator, which is this violet one, is the impact of the options market on the rest of the market, right? On the equities and indexes and stuff like that. So it just measures the impact. So it's not directional. You can see that it doesn't matter if it's below red in sense of direction. It will show you the impact. So the if it's above this green line, it means that the impact of the stock market, of the options market, is very, very high. It's extreme impact. So the options market is very important during this session. And the Friday session that we have here is actually that. So not only we have extreme buying, extreme bullish sentiment here, we also have extreme impact of options. It's because the number of transactions being made and the volume of these transactions and the value of these options transactions is so high that there will be a lot of hedging going on by dealers, and they will impact the price. So in this case, it's we have like another dimension of what's going on. So the sentiment is one, but the other is the impact on the market, because sometimes you will see like there is a slight bullish sentiment. So the yellow line is above blue, so it's bullish, but it's moderate bullish, and but the impact of options is low, like below this this green line, or even sometimes it's below blue line. So basically, in this situation, you just go with the sentiment, because if the impact is low, the options market is going to lead the way in the sense of sentiment. If the impact is high, and the sentiment is like not extreme, you can expect that price is gonna stay within these green and first green and red area. Okay, so how to use these informations? Well, first of all, you see this is the SPY. Okay, you see the quotes are like 418, 19 and stuff. This is SPY. Now over here at the ladder, you have the same exact levels, but they are translated to ES, so it's much easier for you to to know where we at. And basically how I use it is I look for the clusters of these levels here, like over here. Look, it's 84, 87, 80, 88, right? And here is 95. Like, this is almost a cluster, not like this one. This one is perfect. Like vput 2 is 96, well, let's say 97, and vput is 90, 96. This is a cluster. Like, I want to go along here with a very small stop, like 4 or 5 points, something like that. If I see a cluster like this, when there is a V call and O call, which means open interest call, because when you have this letter V at the level, it means that it's based on volume. When you have a letter O, it's more important, it's based on open interest. So when you have a close like this, these levels close to each other, then I'm pretty sure that I want to try and trade it. Now these levels will change during the RTH. Okay, as you can see, this is not straight line, right? And this is RTH session, but these levels are valid throughout the overnight session. So I would definitely use them in overnight, but uh, with overnight session, it's usually good to enter at the CDEV level or PDEV level. So the call deviation level and put deviation level. It's we noticed that during overnight there are a lot of activity from algorithms protecting these levels here. But one thing I would suggest is just observe how these levels, how price interacts with these levels. Whenever you have a cluster of them close to each other, like here with the put levels, it's a really nice nice area to get in and trade it, especially if you have a confluence with, let's say, market profile or maybe the order book. Algorithms would be active here and show you long. So, this is how you combine different techniques or different tools to get it. When the levels are spread out like this, you can attack them, but it will basically be a bit more precise probably, or a bit more accurate, and your accuracy can actually can be a bit degraded when there are no clusters like over here. So yeah, um, I think that's enough information about the options, and we can move to another tool. Okay, actually the last tool I want to talk about today is a bit modified and revised, the Orderflow ES tool. So this tool is it's a bit more about swing trade, uh, more about swing trading on the ES. But you will also get some really crucial information on it in sense of a price structure. Um, so it's packed with some important details that you want to take a note of. So first of all, there is a video on the Momo indicator, so momentum, Orderflow momentum indicators. Okay, these are the two in the lower section. These are cumulative compounded behavior of the time and cells, and also order book, but in a wider perspective, from a wider time frame. And basically what you are seeing here is a lot of different levels, price levels, these bands, these volatility bands, which are based on expected volatility. And like I said, you can view the video on it, the previous one. I tell there in a bit more detail how is it constructed and how it works. But in this revised version, you will also see that, like on the order book analysis page, you will have these small dots on a price line, right? And this is like the basic trend detection based on the order flow. So, like with order book analysis, it's not a primary signal, but it's good to know what actually is going on from this wider perspective in sense of order flow. Is it like last day or two order flow trend is long, or is it short? And it's not linear, so it's not going to be always short when the market is falling. It actually works in a bit different way. And like I said, I really like tools like these. Actually, the one that you see now is it kind of resembles the price, so it's printing greens when it goes up, but when it falls down, it still prints green. And and yeah, this is like the first level of information. This is the order flow momentum trend, uh, based on these two indicators. And I actually um, implemented the strategy into it. I'm still working on it. Like, it's still a work in progress a bit. But these large dots with marker long, these are actually the signals that it generates. These are counter trend signals. Um, in fact, you can see it here that we have a green trend and the dot is marked as short, so there are two conflicting signals on this chart. So it's a mixed bag, right? It's until this turns to red dot on the price line. This might be a bit worse opportunity to short the market. Um, you will also see these horizontal levels, right? You have a pair of these, a pair of these, a pair of these, and a pair of these levels. And these are great levels of support and resistance. Just simply uh, simply using these ones is enough for you to gauge where to put your stop loss or where to put your targets. And if these levels are confluencing with the bands, like over here, for example, so you will see the red bands and the horizontal levels. This is gonna be a really nice resistance. And if price gets there, you have a short signal here. It's okay to short it and ride the short into the green bands and this green area with this horizontal levels. So anyway, I'm not gonna get into more details on the Momo trends. It's also self-explanatory as the signals are here. You just have to remember that these ones are a bit more swing trades. It's for a bit longer time frame. And the other thing is that I'm still working on it because I want to eventually automate this strategy too. But yeah, it's kind of work in progress right now. But it's usable. It's usable. These horizontal levels and the bands when they confluence, and you have a signal here. It's okay to trade it. Um, Now, the other thing that I wanted to mention are these levels, which are the thick lined and marked, like weekly pivot, minor pivot, major support, and stuff like this. These are a really important larger time frame structural levels that are important for the price. And whenever you see price getting in one of these, just look for order book analysis confirming, or just go ahead and go with the level, especially if it confluences with market profile, for example. So I think I'm gonna do a separate video for this one, for this tool, but because I feel like I skipped some important parts of it. But I want to spend a bit more time on tweaking this stuff a bit, and actually, like I said, deploying the automatic strategy based on that, and then we'll do a video which will maybe be more clear. It's like I said, I got a feeling that it might not be um, well explained by me, but as I said, these thick levels, very important ones. This chart will show only the very important levels for overall larger time frame perspective. The trend, it's important. It works really nice, but I use it also with the confluence of other tools, and horizontal lines. Use them as stop loss levels, and also targets, because they usually serve as a good support resistance. Okay, I think that other than the community section where we have a chat room, and you can also see the last profiles here, and some of my last tweets, and yeah, global macro, you have the separate videos on that. It's completely different. It's completely different kind of analysis. The much longer time frame. So I think we need to make another video on the order flow. Yes, but other than that, the options in the order book I think are pretty much explained, and I hope you enjoyed it, and good luck using these tools. If you have any further questions, just hit me up on email or DM me on Twitter. Anyway, you know where to find me. So till the next time. Cheers.